All right, does everybody have the live stream? You guys hear me?
Yes, sir.
All right, see, how many, 10 people in the live stream. How many people on here?
I'm in the car, so I can't really pull it up right now.
That's fine. I just wanted to make sure we get enough people. Okay, it's more people in the live stream. So we got the live stream going. That's good. All right. I'm so tired. Drank a Monster Energy. I'm waiting for it to finish kicking in. In the meantime, we make sure this actually works. This can get temperamental at times. Refresh. I don't see the stream working, actually. Hold on. It says loading. Come on.
Yo.
Hey. Waiting for the... I wanted to make sure the stream works, but it's taking forever to load. PY.
Looks like it's working just fine to me.
Yeah, my computer's just...
You got the stellar chart pulled up. Right. You see fucking stellar going back and forth and shit. It's so suspenseful.
Okay, looks like works. Finally, these back. So I got a loop. Somebody has audio going out of YouTube back into the Discord chat. So you got to mute your mic or mute. You should mute YouTube and just use audio on Discord.
Definitely not me.
Somebody's got it going. It's coming through. Hold on, I can see who it is. Dude, man.
I've got my YouTube muted.
Well, it's backfeeding from you. When I speak, I hear myself coming back, and I see your mic activating.
Huh. Alright, well, let me just mute Discord.
Yeah, just for a test. Yeah, because now it's stopped. Maybe disconnect from Discord channel and reconnect again. Just make sure, because maybe it's your connection or something. I don't know. It's definitely coming from you, though.
Better switch over to push to talk.
Yeah, you could do that. I'd just rather make sure it works. Like, sometimes it, certain people, that'll happen where it'll just start looping from within the Discord app or something. I don't know. Or maybe if you're using an external mic, it causes something weird's going on. But all right, whatever. Let me make sure he's back real quick, and then we'll get started.
There's a nice dip right now.
This dude on Twitter is pissing me off. A new one.
USD chart, you'll see that the Stomp RSI or Stogo RSI, whatever, is low. That means that we might get a bounce off of like Bitcoin like insertion instead of Tether insertion. So we might be actually literally waiting on that because the total supply of Stellar is like the same. So that's my best guess. If not, whether they're just gonna get stopped out and blah blah. But this would be a good time to find if you're not. That's my opinion. We still have to like we're supposed to be long this whole week, but that's not to say without corrections. But this is not even a correction, you know, like compared to the pump, and you'll see this is not a correction. You'd probably be actually trading this risk free, not even the 1%, because I don't know. This could go back up.
I wouldn't enter yet.
Look back up.
I wouldn't enter into XLM more yet because we came back down and testing the bottom of the Ichimoku cloud on one of our dynamic supports. So I'd want to see how that happens, get confirmation, possibly see it get back above the 55. If it gets back above the 55 or back above both EMAs, then it's a different story. Back above the 55 is really all I need. It's right there. That would make me more comfortable in expanding my position and playing this next subwave, but it just did correct. So it just took a wave 2 correction. And we should move up more as long as BTC remains stable.
Yeah,
so
that was a dip off ETC. Yeah. They were liquidating. The thing is that they liquidated a bunch of shorts this morning, like or let's say 2 hours ago, they liquidated a bunch of shorts, meaning that they longed a shit ton, and now they're slowly like opening up short contracts here and there, but they're accumulating, and that's just causing like little dips. So I don't know. This is really not even a lot compared to like the pump and all that shit. So just gotta make sure it stays like. I mean, it's getting to me that point where it's like kind of critical for it to receive support. And with all the good news, I don't know why it's not getting support, especially at this level, but it should be. People should be buying the dip basically. But yeah, it fucking raced past the 5-year rate on the hour. That show's cool. Like twice, actually, like almost 3 times. I mean, I'm more happy like trading risk free than I am honestly making a profit. I'd rather honestly even go down and trading risk free and just really let this one play out. But that's like a personal thing, right? I have a huge whale call, bro, up until like bigger targets, right? But they're obviously not going to be completed in a day. So, pretty much like I'll take the no risk, like I'll take the no risk bet, but I'm not going to lose money knowing that the shit just went up. So, if this truly is like any sort of Elliott Wave, then it won't break past like our entry point pretty much. If it's not, then we'll just get our money back. So, I don't know. Like, it was only like 4% profit anyways, like touching the 55 EMA, so it's not like, I'd rather manage the risk knowing that the profits will come eventually. But it's amazing how these people are like informed about Stellar and shit. And I just announced like, did you see that ETF Coinbase news? Like, that's some good shit, bro. I don't think Americans are more likely to bump because Coinbase is actually thinking about it, or they're exploring. Obviously, it's a rumor. An ETF. That's cool. And Trump is saying that he just put somebody in administration that's like leaning in on cryptocurrencies and shit. Which I have to find the article again. And I just okay, so they're fucking wrecking the shit here now. They're liquidating loans. This story goes.
That's better. My monsters.
I'm gonna go back to risk free, bro. I'd rather get stopped out at risk free than get stopped out at 1%. To be honest, because then buying back that dip is gonna be not good. So I'm gonna go back to risk free.
There's not much of a difference for me having it at 1%.
I just rather manage the risk really well because I want to see this through. You know, I want to see this fall through. So if it doesn't work out, that's cool. They don't lose any money, but I would like to see this go through because it's fucking calm. So I'm just gonna move it to 0%. But you know, obviously anybody could take it between 1% and 4% by now. So, yeah.
Yep. Well, it's converging and it's looking more bullish, but we'll get into that in a minute. So, all right, let's get started going over our topics on the day. Let me just make sure I have everything I need here. All my notes. Divergence, don't really care about that. And here we go. So, I wanted to review some of the things people asked about that people wanted me to get into again. Just so you know, my wife's getting, her flight now is getting in at, I'm going to have to leave here at like 1 o'clock. So, we have an hour and a half. We'll probably do a little less Q&A, or maybe Q&A will just be on the phone with the group and not during the live stream. So, I'm going to work out that detail. I'll let you know. We have enough time. So, let's just get this done and then we'll take it from there. Our flight gets in at 1:15. I'm going to have to leave here at 12:45, so an hour and 15 minutes, and then I got a jet. I really have like a little over an hour pretty much for this stream. The one tonight will be longer and more detailed with more Q&A and stuff, if you can make that one as well. If you have questions, I'll let you know when I'm about to wrap up here, and then if you have questions, we can jump to your questions and cut off some of the other content, which we can get into later. That content you could always watch later tonight when I play back that, because I'll have that live stream up for later review. So, anyway, all right, let me go through there were some topics people requested that we go over in more detail. So I've already done a live stream on all these different things, but some people had additional questions or they wanted to get into it further. So the next live stream we do, let me know in Vader University class discussion. We'll talk about what you want to do, which concepts you want to go over, which topics you want to review, and we can set a new primary topic along with certain satellite topics that we can touch on or review briefly that were from other streams. In this case, I wanted to run through these past ideas. So support and resistance very quickly, my EMA model, Ichimoku, and then the combination of the two with my 4 dynamic supports, IchEMA. If you are a newer trader and you really don't know what I'm talking about yet, you have to DM me and tell me. I need to know that. If I don't know that, I'm going to go forward with the pace that I'm going at, assuming that everybody here understands exactly what I'm doing. If you don't understand what I'm doing and what I'm saying, all you have to do is tell me, and we could do a live stream. If it's just the two of us, so be it. We could start as basic as what is Binance and what are cryptocurrency exchanges. We can start at that level. All you have to do is ask, and we'll make it happen. There's no limit to what information you need.
Amen.
Yeah.
No stupid questions, just stupid answers.
Yeah. So there's no limit to what. If you have no information or no experience, that's fine. Just tell me, and we'll make it happen. We'll start at whatever level you need to. So that being said, first idea was support and resistance. I've talked about it before that support and resistance is the most important concept you can master before you start using even my IchEMA model, which is very simple. It uses 4 dynamic supports and resistance levels that are dynamic, that move around the screen. They're not static. It's just not a horizontal line going across. But depending on the price action and the variables in the market, it changes over time. So hence they're dynamic. Using Fibonacci is just giving you different support and resistance levels. How it comes to those levels is using the Fibonacci sequence, but and the Fibonacci ratio, but you don't need to necessarily understand that. You could just use the tool, but you need to know what it's doing, which is it's giving you support and resistance levels. So that's the most important concept. Support and resistance is a line on the chart where you can't go up or you can't go down below it. Or not that you can't, but you have support at a support level. You have resistance at a resistance level, meaning if the price is coming down and you hit a support level, you're likely to have the price stay right there and bounce back up or stay and hover right there for a little while. Sometimes it'll break through and keep going down. Let me see something. So sometimes looking at the screen here, for instance, on the XLM chart, you'll see if I drew a line, let's see, right, is that a good one? Yeah, it's decent. I'd rather find a better one just for the example. Here we go, I'll just use this. So I'm drawing a line right here. You can see it right in the center of the screen at 20.27, around there. This red line, make it thicker so you guys can see. So that line is a potential support and resistance level, meaning that when the price comes down, it bounces off of that level. It finds support, and then it broke through, and then it bounced back up, and then it caught resistance there. It got rejected, and then it finally broke through after kind of stopping at that level, came back down, it tested it, and got more support. And then the next time it came down, it tested it, it got support again, and then bounced up until eventually it broke through. So you'll have certain lines where you'll see that over and over again, where you're getting a lot of support or resistance at a particular level. And that's very important because that's how everything else is used. All those other concepts are just giving you support and resistance, or some analysis of support and resistance, which you're then building upon that information. From that point forward, you're using what you know about support and resistance to utilize Fibonacci, for instance. So it's very critical that you have a primary understanding of those concepts. If you need to go over that in more detail, we could do that. Finding support and resistance, there's a couple different ways. If you're looking at a chart, you can, once you do this long enough, and kind of people who've been following me a while and worked with me for a while know that I sort of have just a knack for this, I could just look at a chart and just see support resistance levels. So if the price is coming down, if we're moving down and I'm looking at the chart, I very well may just look at it for a second and be like, we're coming up on a support, and I just sort of spot it because my eye fills in these horizontal lines, and I'm very good at spotting where they are. In this case, I can see there's a horizontal line going across there where we get a lot of rejections. So right there, right there, right there, broke up in this area, and then right there, right there. Let's find, I know there's some good SRs in here. Man, that's a huge extended drop. Like, here's an example of a really, really strong support. So if I place a horizontal line right here, you'll see that over here we hit the bottom and then we bounced, came back down, tested the bottom, bounced, came up, came back down, bounced. After that happened, I would have drawn a support line there, and then as we're moving across and then we start coming back down, I would say, hey, everybody, remember, right at 3.196, we have that really strong support from over here, so we're going to catch that support over here and potentially bounce. So that would have been a very easy play where you could have entered a trade right on this bounce and placed a stop loss directly below that support level, because you know that when you're coming back down, there's a good probability that you're going to bounce at that level. We actually did. We came back down, we hit right here, we bounced at that level before going back up, then we failed and came back down and broke through. But before we came down and broke through, we did hold at that support level. A lot of the time, they'll get tested 3-4 times before they actually break, so it's common to see that. But those support and resistance levels decide where I place my stop losses, where I enter my trades. That's a very important concept to understand and to master, perhaps more important than anything else. So if it's not something you feel comfortable with, that you fully understand, send me a DM, talk to me about it. We'll set up a time for us to work on it together, and I can show you 100 examples. I can explain the science behind it, the psychology behind it, and we could dive into it at a much deeper level. For now, you understand what it is, basically. So, all right, let's see. Next.
So, they were trying to pump us last night. Just saying. I don't think that was American money.
Say that again?
So I think China pumped us last night. American money. Like on BTC. This fella.
This dude is really fucking pissing me off.
Is it some guy on Twitter?
Yeah, I'm just gonna have to ignore him.
Dude, just don't feed the trolls. Just let it be.
It's not that he's a troll. I'm trying to explain to him, but the shit he's saying, he's just too stupid. He's just too dumb. He said he posted a picture of my DM to him where I said, I'm about to do a Vader University live stream with the team, but we could catch up later if you're interested in talking about this topic. And then he posted that and said, God, I don't know what's up. Like, this is what he said to me in a DM. But, buddy, what happened here? We were going to catch up later, and now all of a sudden you're busy because the last time he asked me something, and I said, dude, I'm busy. We'll talk later. And I was like, yeah, I said I'm busy doing a live stream. We can talk later. When I said we'll talk later, that doesn't mean I have all the time in the world right now. That means we'll talk later. I don't understand how people's brains work.
Just like my fucking girlfriend.
What, she's retarded?
No, she's just...
Oh, because this dude is.
Like a motherfucker.
All right. So anyway, next brief review was EMA model. So for those who don't know, these are things. Again, I'm only doing 5 to 10 minutes on each of these because you can go back and watch our other live streams from the 17th of August onward. I really locked in my model for doing live streams where the educational based ones. The ones like last night where we're charting a little bit and I'm in and out of the room aren't great. I don't really suggest everybody watch those back when they're a couple hours long. But the ones from the 17th that are called Vader University that have a very specific topic in mind that appear in the title of the video, those are the ones that you should definitely watch. And all of these concepts are covered in great length in those. So that's where you're going to find a much more detailed review of these various concepts. So my IchEMA model, or I'll get to that, but my EMA model, the 55 and 99 EMA on the hourly chart. This works on the hourly chart. Some people have different strategies where they'll use 100 and a 200 EMA on the daily to try to see when there's a difference in trend. The model that I came up with, I didn't copy anybody else. I engineered it, designed this entire model myself. Everything about my trading strategy is my own invention. My IchEMA model is my own design. My where did I put? Is my own design. The way I use Ichimoku Cloud with EMA is my own design, and my EMAs themselves, the 55 and the 99 hourly, is my own design. So in the case of the EMA model, for those who haven't seen this before, you can name any. I'm not going to go through the whole thing now, but I would just tell people, like, name an alt, any alt. You can name any coin, any chart, and it will always be correct. So if you go to the VET chart, was a perfect example. I found this last night. I was like, I'm going to refer to this during a live stream. If you look at these yellow arrows signify when we had a crossover of the 55 and the 99 EMA. When it crossed over bearish, this is the extended run we had with the 55 on the bottom the entire time. So the 99's on the top, 55's on the bottom, the entirety of that drop down. Then we get the bullish crossover on the way back up. This entire run up, the 55 is on the top, the 99 is on the bottom, till we get to the top, then we cross back over, 55's on the bottom, 99 is on the top. That's why I said last night when some people were talking about getting into VET, I said I would not get into VET right now, not until we get the EMAs much closer, because once they do cross over, they tend to go for a while. VET is a pretty decisive coin. When it's going down very big and for a very long time, and when it's going up, the profits are endless, but you have to know when to get in and when to get out, because there's huge drops and huge pumps, runs. In this case, we're back down. We're getting a lot of resistance from the 99 or from the 55 EMA. So this comes down to my EMA strategy's second aspect, which is as dynamic supports under the IchEMA model. For now, just considering the cross and identifying trends. When I refer to my EMA model, I'm talking about the 55 and 99 EMA on the hourly and using that to identify trends. Not really as supports yet. That's IchEMA. So when we're doing it to identify trends, we had a really strong extended bull run, and now we're in a bear trend. And this bear trend is very strong because on VET, when we do get that crossover, that bearish or bullish crossover with my EMA model, it's generally pretty definitive and it stays for a while. Is it possible that we get a pump and it crosses back over and goes bullish? Yes, it is possible. I don't think it's likely, at least not likely enough where I would put my money into VET right now. So 100% I would stay out of VET. Some people played it last night, played this bounce, and they rode it up to the 55 here, and now they're getting rejected. I told them last night, if it goes up, you're going to get rejected from the 55. So that brings up the using these as dynamic supports as part of my IchEMA model. Let me just quickly mention Ichimoku. The way I use Ichimoku, there's a lot of other lines and stuff that people put to use. I don't know what a lot of them do. I don't try to pretend to be an expert in any of these concepts by themselves. I'm an expert in the models that I've designed and I've engineered myself using these different concepts, but in each of these concepts, I'm not an expert at Elliott Wave. I'm not an expert at Ichimoku. I happen to know a decent amount about it, but I've also come up with a way to use that data in my own model. And in the case of Ichimoku, there's only a couple things I'll do with it. I use it for support, which is part of my IchEMA model, and then I use it for one of the simple facts about Ichimoku, of the rule that when you break into the Ichimoku cloud with any amount of force, generally speaking, much higher probability of breaking across to the other side. So if you have a really broad Ichimoku cloud, like right here, if you were to break in, if we popped in right here, chances are we're going to go for a 10% run to the other side of the cloud. And then a lot of the times you'll get to the other side, you'll get rejected and come back down. Sometimes you go and bounce between the top and the bottom of the cloud. You'll get rejected, and then you'll get a support from the bottom, and then you'll get rejected from the top. And a lot of the time you'll break through the other side. But the one thing that you'll notice, and what has stood out to me more than anything of all the various things I read about Ichimoku, is that once you enter the cloud, chances are you're going to the other side. Almost every time you move across to the other side. So it's a very reliable thing to have in your back pocket, just to know that you have that expectation. If you're kind of curious on other aspects of the chart and you don't really know exactly what it's going to do, you might not see any strong bullish divergence or any strong bullish signals to help tell you what's going to happen. If you see that, that's a very good indicator that you're going to get continued movement in that direction. So it's almost like having a trend continuation pattern. And then lastly, IchEMA, which is a combination of Ichimoku and my EMA model. And what I do with that is I have the top of the Ichimoku cloud, the bottom of the Ichimoku cloud, so leading span A and leading span B, and then the 55 hourly EMA and the 99 hourly EMA. Just as a recap for people who weren't here before, don't know this, EMAs stands for exponential moving average as opposed to simple moving average or normal moving average. The difference is exponential moving average is weighted. So the most recent trading is weighted the way that average is calculated. In the case of what we see on screen with VET, we had a really sharp drop, and almost immediately after that drop, the EMAs immediately started to converge. So when I'm looking at the EMAs, I look for these crossover sections, I look for divergence, and I look for convergence. When the EMAs are diverging, like they are during this bullish run with the 55 breaking away from the 99, the 55 is going up faster than the 99. That's occurring because of how many time frames each one is using to calculate its average. So when you get that divergence, that's an increase in impulsiveness. You're seeing it get stronger and more impulsive as it's moving up. That's kind of what you see with a parabolic move as opposed to a linear move. You'll see that really strong increase in upward momentum. Same thing on the way down. As you get divergence, that's when moving down even faster and you're following a steeper and steeper decline. You're going to get divergence of the EMAs. When you're getting them, going diverging and converging and diverging, that happens almost immediately as soon as the price changes. So the price changes here, then they start getting closer together. And then the price changes again, starts going down. They almost immediately start moving away from each other. The reason that happens is because it's exponential moving average, and the most recent trading will affect that overall average quicker than the entirety of the data that's being averaged in. So when you're averaging something like 10 people are in a room and you're averaging their height together, if you were to take one really tall person in the room and say, I'm going to count you as 3 people because I think taller people are more important, that's going to be reflected in your data. That's essentially what's happening here. The most recent few candles are considered more important. So those are getting factored into the average substantially more than the rest of those candles that are in the average, if that makes sense. And that's really helpful because it helps you to identify a trend very quickly. A lot of moving averages, and a lot of the time that people have a moving average based strategy, it's heavily behind. It's a lagging indicator, so you'll see a big reversal in the trend like this. It starts going down, but the actual moving averages don't cross over and show you that negative signal until you're further down over here. Hey, shh, no barking. With mine, it has that bearish signal almost immediately upon dropping because of the fact that it's exponential and it factors in the most recent trading. That's why I use that as well. So just a quick side note on that. So using, hold on.
Badass model, by the way.
Thanks.
Basically, when converging and 55 EMA is over 99 EMA, that means that it's going to drop. And then when diverging and 55 EMA is on top of 99 EMA, it's going to have an impulse or increase in price. So you just have to identify when, like right now, XLM is like converging more than it is diverging, but because the 55 EMA is crossing over, is attempting to cross over to the 89, but it's just not there yet. You know, it needs more support. But I'm talking about the 1 hour chart, not the 15 minute. But
I didn't. Yeah, I didn't even catch the beginning of what you said. Sorry, but all right. So. Yeah, in the case of, what are they doing? In the case of XLM, well, they're diverging because they're still moving down much faster. But now that it bounced up, they're starting to come back together, although we're still getting a lot of resistance from the 55 EMA, which was my original concern. I probably have that in my notes here somewhere. Here we go. I would set the intersection of the cloud right at the 55 EMA as my primary resistance. So I said that back down here, right? Because I knew what was going to happen. My primary resistance was right here. I mean, it's not a coincidence that I happened to say my primary resistance that we have to get through is the 55 EMA, and that's exactly what happened. It's because my model is accurate as all hell. It's not because I'm from the future. It's just because my model is. And the model does a very good job of predicting what's going to happen as a leading indicator. And I spent a lot of time designing it. So anyway, I called for the 55 EMA to be a strong resistance because I knew it would be. We caught that resistance and we got rejected. So let me just finish out my IchEMA description, which is, this is kind of perfect. I talked about having horizontal support and resistance and how that's used in other indicators, how that understanding is critical to understanding how to use and understand, or how to use and to implement different trading theories, strategies, and models. Well, this is the example why. In my IchEMA model, we have those 4 dynamic supports, 2 of which are the EMAs. So they're support or resistance. I call them dynamic supports, but it's dynamic resistance, dynamic support. And that's just a term I coined because they are like regular horizontal support and resistance, but they're dynamic. It constantly moves in accordance with the price, depending on what's going on with other variables in the space. So here we have that really strong dynamic resistance. We have a second dynamic resistance in the form of the 99. So if you break through one resistance, chances are you go to the next. And then if you break through that one, there's always another resistance on the other side of the Ichi cloud. So with my model, you'll find nobody's come up with a better model for this. With those 4 dynamic supports, you could use that to map out entire plays. So when I designed this entry, I got into this entry down here. It was a very specific level. We were talking about it last night. We talked about how it looks bullish with the bullish divergence on the RSI and some other indicators. So we were all looking to get in. Crave New Cryptos in the group also had some info that was really helpful in figuring out the best play. So after looking at that, I wanted to get the best possible entry. So I got in down over here after we bounced up. I ended up getting in at pretty much the best entry I possibly could. From the second I decided to get in to the time that my order was executed, the price really never got lower because I spotted a really good potential entry based on local supports on short-term time frames. But sometimes you'll do the same thing on a long-term trade or on a larger scale trade. Looking at this right here, I can see we got support, a lot of support from this level right here at 19,009. So pretty much 19 cents even. There was a ton of support. If we end up coming back down, that could be a potential spot where you would place your stop loss below it, because that's a really strong support. So having that information is helpful for placing your stop losses and finding the best entries. And when it's up in the range where it's touching the EMAs and messing with the EMAs, that can be a really good opportunity too. Just like my entry down here, think of another situation. Imagine you're up in this scenario and you are going to buy. Forget about the fact that it went down after this, because obviously it did. But if you're in a scenario where the price is up around the EMAs and you're getting a lot of resistance from the 55 EMA here, and it's breaking through a little bit but not quite making it to the 99, you could use that for your entry. You could say, all right, if I enter at one of these prices here, I have a really strong support and resistance where I can put my stop loss below it. So let me find a good example earlier on this chart. All right, so look right here. So we bounce up, we get rejected at the 99 EMA, we come back down, we get rejected at the 55 EMA, we come back down, and then we get up and we break through both EMAs. So now I could say, all right, we have confirmation. We've broken through both EMAs with force. Now it looks like we're actually going to continue moving up. So if I were to enter and use that as confirmation and enter right there, I actually have the 55 and the 99 EMA have both served as strong resistance up until this point on this most recent section of the chart, right? So if I were to enter right now and consider this my entry price at 21.9, I could then place my stop loss below those two resistance / support levels. So if we come back and dip back down, I'm confident that that dynamic support is going to hold and give us support. So if I place my stop loss 2% below those, 3% below my entry price is right above a strong support. My stop loss is right below a strong support. And that's always going to be the case. I will not trade if I can't get an entry that's very close and is above a strong support with a stop loss that's very close and below a strong support. I will skip the trade entirely. No regrets. I won't even care. I don't think of it as a missed opportunity. The trade wasn't right. I need to have enough confidence, and I need to know that I can get to risk-free status quickly. I need to know that I can get into the trade with very low risk and very low exposure. If I can't do that, I will happily walk away. So in this case, I can place my stop loss a little bit below the EMAs, and then as we're coming back down, you'll see that EMAs are giving us support already. As we come back down, we got a bunch of support from the EMAs. So since my stop loss is all the way down here and now we're back up there, I can move my stop loss up again to below the EMAs right here. Now I've locked in 1.5% profit, right? 2% profit by moving up my stop loss. So my entry price was down here. If I move my stop loss up to my entry price, that would already give me a risk-free trade where I can no longer lose any capital. I can't take a loss. And then when we get up here and we catch support from the EMAs again and bounce, then I would move my stop loss up again, lock in 2%. And then we came back down and we broke right through the supports, which is fine. We broke through the supports, the two dynamic supports. I got stopped out here and I made a 2% profit on the trade. Then it comes down and it gets massive support from the bottom of the Ichimoku cloud, which, remember, that was my other dynamic support, right? The bottom of the Ichimoku cloud was a major dynamic. So what did I say before? When you break through the 55 or the 99, you have the other EMA. When you break through those, then you have the top of the Ichimoku cloud, the bottom of the Ichimoku cloud. So you have 4 supports total. And I can always rely on at least one of those holding up. So in this case, we came back down. I got stopped out. I made a 2% profit. Then it bounced right off of the EMA on the bottom of the Ichi cloud. So if I was more patient, this is a good illustration. If I was more patient when I had my stop loss down here, if I never moved it up to lock in the 2% profit, which I usually don't. In this example, I said that I would, but in reality, I probably wouldn't. And the reason why is because of how I trade. Generally speaking, I'm willing to miss out on the first 4, 5, 6% of profit. I don't care if I'm missing out on potential profit. The most important thing to me is being completely risk-free where I don't have to risk any of my capital. That's what I aim for as the first step. Beyond that, every bit of capital, every bit of profit that I lock in by incrementally moving up my stop losses is just icing on the cake. And that's just building up my profits from there. So in this case, if I hadn't moved it up so prematurely, when it bounced off of the bottom of the Ichimoku cloud here, remember my other dynamic support, we would have gone up and I would have had additional gains. I would have made my money back after it came back down. So if you were to just sell at the top, sure, you could have made 13% profit, but there's no way to know exactly when it was going to be the top. Maybe when the RSI trended down really hard, you could have moved your stop loss all the way up or just sold, straight up sold up here. That's certainly an option. But if you didn't, then you're back down here and you're trying to get the best profit. So watching what's happening here and using the other concepts we discussed, you would have another support from Ichimoku. We get the bounce off of that. Now you're getting an extra bounce. Maybe you can make more money and move your stop loss up again. So it's up to you when you want to move your stop losses up and based on your risk tolerance. But this is a good illustration where we have the EMAs giving us strong support and resistance. And then here the Ichimoku cloud giving us strong support and resistance. And what's actually perfect about this, check this out. This actually shows what I talked about before, how the Ichi cloud works, right? So this Ichimoku cloud is a leading indicator. So it's always here ahead of the price. So right here you'll see, move this out of the way, the Ichi cloud's all the way up here even though the price stops over here. You guys see that? Price stops here. Ichimoku is actually all the way out here already. So that means that we had this green Ichimoku cloud right there. Over here, this cloud was already here before the price filled it in. And look how well it matched up. Price came down, bounced off the bottom of the cloud, went up, rode the top of the cloud, across, sideways for a little bit, kept moving up to the top of the cloud. And then it dipped back down, and look at that wick, right back to the bottom of the cloud. And then it went back up to the top of the cloud, and then it rode the top of the cloud until it eventually broke out. So the Ichimoku cloud can be a really, really helpful tool. And think about it. If we're able to use... Huh?
It's incredibly reliable and useful.
Yeah. So if we're able to use the Ichimoku cloud with those expectations, then in theory we can use that to our advantage when we're doing support and resistance, when you're trying to find an ideal entry point. If you know that chances are you're going to get a strong support or a strong resistance from the top of this cloud, you might not want to buy yet because you know there's a strong resistance there and it's likely you're going to come back down, and vice versa. If you're going and bouncing off of the bottom and then you get a strong bounce, you can be pretty confident that that bottom's going to hold, so you can enter after you get confirmation, and then your stop loss would be below that support. So I think I went over a lot longer than I wanted to on that particular topic. So the IchEMA model incorporates 55 and 99 EMA strategy, plus the Ichimoku cloud, and it gives me the 4 dynamic supports, which is my best strategy and what I'm most proud of. It just works incredibly well. It's made me a lot of money, but a lot more important than making money, it's stopped me and members of our group from losing money. People have managed to maintain and hold on to their capital they would have otherwise lost because they're using my model. They're using my stop loss strategy, but they're using my model to target those stop losses appropriately based on support and resistance levels, whether it's my IchEMA model using the 5599 and Ichi Cloud, or whether it's using strong horizontal supports or from past trading activity. They're able to save capital, and that's the most important thing, because once you lose it, you can't get it back. So on to the rest, main topics that I wanted to go over today. So we have... I only have like 45 minutes now, so we're going to skip questions. We'll have to resume this when I get home later. And then we're going to do a live stream tonight as well. So the main topic I wanted to go over again was Fibonacci and Elliott Wave. Real quick, does anybody have any questions about the stuff we just went over?
I do not, but if anybody else does, obviously.
All right. I'm also really tired too, so I'm trying to go as fast be as good as I normally would be, but I'm exhausted. I was trading until 4 or 5 o'clock in the morning. Huh?
I said you and me both, bro.
Yeah, I was trading until 4 or 5 a.m., and then I had to get up early to do the stream. That's why I was so pissed when not a lot of people showed up at first for this one. Let me ask you this. Is there... during the stream we should be using the Vader University class discussion because we're in a Vader University session, so don't use private dark side. Some people are typing in it. Use Vader University class discussion channel. But I see somebody said risk free is where it's at. Just rub one out. Hey, Vader, how do we implement EMA 5599 in a trading view? Okay, I'll show you that. Use Vader University class discussion, the last under premium chat channels. I'm going to show you when you're using EMA. So you just go to indicators and type exponential moving average exponential. Whoops. So make it, actually you could just do EMA, moving average exponential. Click that, it'll open up one of them. And then you go to settings, the second option, the little gear, right, to go to format. And then you specify what color you want it and what your input is. So it's either going to be 55 or 99. Those are the two inputs that we have. One is 55, the other one's a 99. And those are your two EMAs. And then when you're on the hourly chart, that's where it works the best. You could use a similar setup on other time frames, but I specifically designed it and engineered this thing to work on the hourly chart for a specific reason because of the way the data is on an hourly chart. So I wouldn't suggest using it elsewhere and expecting the same principles of crossover and whatnot. You might be able to use it for supports and shit, but all right. So real quick, who in this? You put a question up?
Yeah, I'll read it out loud. Fib retracement and rally.
I'm looking at it. I got it. Is there a difference setting them up? Well, no, it's the same thing, but we'll get to that in a second, because that's our main topic. Is there anybody in the live stream? And remember, Vader University class discussion, that's the Discord channel where you should be typing. Anybody here who's in this stream who will not be able to be in tonight's stream later tonight in about 7-8 hours. I could do it a little earlier in like 5 hours if you want, but tell me, is there anybody here who can't come tonight?
I think you should let me check one thing and I'll tell you when that's probably best to do it based off like whale moves. Give me a second. Because I'm expecting a big ass pump, but I just don't know where it's gonna go, where the money's gonna go. So just give me 1 second. Okay, so I suggest doing it like, okay, so it says 4, fuck, that sucks. That's not good. So it says really 3 hours from now. 3 hours from now, there's going to be a badass pump. So, I don't know where it's going to be. And that's going to be on Binance. I won't know the coin until it happens. And I don't know if, usually like when they do pumps, like these pumps by these big ass wheels, it coincides with like the BTC price going up. So, I'm going to share the coin that's going to get pumped when I get announced like which one it is. But I'm not telling anybody to FOMO in or anything like that. Really, it's more just to like look back and watch how like pump and dumps like fucking work really, because that's like the best way I can describe it. And,
I was in the middle of typing. You said that there's going to be a pump later.
Yeah, and precisely 3 hours, I think, like 3 hours.
So from what, a pump and dump group?
Yeah, but a huge one. This is the biggest pump group that I know. So
yeah. I don't want anybody getting in it though.
Yeah, but watching them doesn't hurt. Observing how markets work is you can draw Elliott waves and corrective waves and ABC waves, like pretty much ABC waves, because as you know, it only gets pumped to get dumped, but it's really just for watching. It's not for participation. Yeah,
no, I know. As long as I wouldn't share any prices or anything like that. But if you want to just name the coin that's going to get pumped and dumped, just make sure you tell everybody not to buy it, because I have a very strict rule. I never post that shit because I don't want people to buy it. Okay, all right. We're limited on time. Let me get back to this. So let me see what people said. If you do it later, then I can make it. I can do it later. If it's earlier, then I'm SOL. I can attend part of it depending on how long it is. But you bet your butt I will watch anything I missed on Monday. 9 hours from now would be a great time. That would be 9 p.m. my time. Can we use this strategy in the 4-hour chart? Boki can't attend later. Everybody can do it. If I do 8 to 9 p.m. tonight, my time, which is 8 to 9 hours from right now, It sounds like everybody who's here is going to be able to do that. Plus, there's people who aren't in the stream who'd be able to do that. So that would be good. And then the couple people who won't be able to be here later, I'll want to focus on you. So, Boki, I'm going to go over the original topic that I was going to do for the stream, which I'm going to go again tonight to do. 8 to 9 hours from now would be good. All right, 8 to 9 hours from now is settled. So for right now, since we're already on, since I have to go pick up my wife, I was trying to figure out the best way to do this. So Boki, it looks like, is the only person who really can't be around later. What do you have any questions or anything you want to go over? Yeah, it's 3 a.m. now, but I figured that you would be in the later one tonight. The later one tonight would be perfect for Europe, right? No, I guess that might still be too early.
Right now it's 6 o'clock in Europe, yeah.
Yeah, how is it 3 a.m. in Europe?
I don't know where the fucking Europe is, but it's not.
Yeah, I was like, I specifically did the earlier morning one was for all of our European members.
Yeah, it's just not. That's not true. Like, unless he's like in fucking, I don't know.
No, it's not that. I know you're gonna miss it. What I'm saying, man, is I want you to, since we're on right now. Oh, okay. The 9 p.m. tonight is 3 a.m. Okay, yeah. Okay, so
that makes sense.
So, because you said this is 3 a.m. All right. So, what topics, Boki, do you need to go over? Because we're on together right now. What questions do you have for me, and which things do you need to review? Because I was going to go over Elliott Wave and Fibonacci. Do you want me to run through Elliott Wave and Fibonacci right now for the next half hour? Because then I have to go. Or is there something else you'd rather me do? Tonight, I have unlimited time. I can stream all night long. Doesn't matter. But right now, I have very limited time. So you tell me. Okay, so we're going to go over Fibonacci. And then is there anything specific of what we already went over that you need me to elaborate on? Any questions that you have? You just wrote that.
No, I'm just fucking with you, bro. And you said there's really not a difference. It's just a matter of, like, I think, yeah, Boki's, like, not really answering.
Yeah, he's typing. He was before. Is there anything specific that you want me to answer that I already went over? We're going to go over Fibonacci now. And then do you have any questions for me? Since I only have a half hour, I'm going to have to jump off. I want you to ask me questions while we're here. Okay. All right. Well, let's go over Fibonacci then. And then tonight's stream will focus more on Elliott Wave and Fibonacci. For now, we're just going to keep it to Fibonacci because that's something that he needs, and he's not going to be here later. Everybody else is. So we can use any chart. I'm gonna use. I don't want to use this one because this is an active trade, and it's just gonna end up messing up what I have and making a mess of things. So I'm gonna use something that isn't an active trade.
Go with like vet or on because they're good things to study. I mean, they're good points to study and shit. See how they go. Like, vet has a nice order book right now, but it's not being, it's not going. And actually, it looks like almost like the EMAs are diverging, like, in a bad way.
All right, come on. So let's see. ONT is another one. Perfect example of my EMA model, right? So we go bearish, 55 on the bottom. This entire trend down, super bearish with the 55 EMA below, right? Then we get the crossover and a massive run with the 55 EMA on the top. Go on a super run, make massive gains until we started getting squirrely and the EMAs started dancing. When I say we have dancing EMAs, that's what I'm referring to. Dancing EMAs is a period of uncertainty where they're crossing back and forth and can't really make up their mind. But if we were to use just the bull part, right, so the crossover's down here, up to the crossover here, would be 55% in the course of 2 weeks. So just to let you know, with my EMA strategy, you could just buy when you get the bullish crossover and sell when you get the bearish crossover back. That's possible. You actually could do that. But the issue with that is that doesn't take into account all the other stuff that's happening. So instead of buying when we get the crossover here, there's other things that I would look for. I would look to see when we first bounced, if we have any strong indicators of a strong bounce, get above some strong supports, some bullish divergence. If I can do that, I could potentially enter as far down as back here. And instead of making 55, I can make 70%. Same with the selling. So if you ride this up, it would be great to be able to sell at the top up here instead of selling back when it's down here when the EMA is actually crossed over. So you could do that based on spotting this bearish divergence. There was a lot of bearish divergence here. So you could have said, all right, I'm going to unload and sell up here, and then you could have made an additional 11%. But you could, in theory, just trade based on that, but I don't recommend it because it's very hard to do so. There's too many other variables at play, and sometimes, because it's still a trailing indicator. It still takes a minute after the price changes for the EMAs to cross over and everything, so it's not perfect. But you could theoretically do that. Once you use it as a tool and you use all that other data and factor in all those other concepts and strategies, then it's amazingly useful. Then you're using a bunch of stuff at once. Then you're going to be able to sell at the top instead of when the crossover happens. You're going to be able to sell earlier and get out at a higher price. You're also going to be able to buy earlier and get in at a lower price. We've done that several times. I did that with my calls on BTC with all the alts and VET and ONT a couple weeks ago when we went on a super strong short-term bull run. That happened after I spotted the convergence of the EMAs on Bitcoin. I did an analysis of the 55 and 99 EMAs on Bitcoin in general over the last 4 months and figured out how relevant it was. So all that data combined ended up being particularly useful. So, all right, now let's do a quick Fibonacci examples. This is jam-packed with stuff, so I'm just going to use this one instead.
By the way, if you would have invested in BNB, you would have made money yesterday.
Yeah. Last night, spotted that.
Like, literally, when you said that you were going to enter, if you would have just clicked the fucking button,
yeah,
you would have made all that in profit.
So, I would have got 6% and change, but look at that resistance from the 55. I mean, is that not amazing? Sure. People ask me, like, how did you come up with 55 and 99? It seems random, and it's like, well, I did after hundreds of hours of work. But I mean, like, that's amazing. It's just perfect spot for dynamic resistance. Even up here, it broke through a little bit, but overall, it held pretty well. Up here, it pretty much held very well, except for one little wick that broke through. And then when it did eventually break through, over here, we had the same thing, the 99 support, 99, 99, 99, EMA 99, EMA 99, all across. We're getting support from the 99 EMA on the occasions that it breaks through the 55 EMA. Same thing, 55, 55, 55, breaks through, 99. 55, 55. So I'm telling you, there's nobody in this space who does what I do has a model that's even remotely close to as good as this. So with Fibonacci, there's a couple things we're going to keep in mind. Let me figure out. I got to see. I want one that has an Elliott Wave count. Let me see. You know what? I could do BTC. BTC would work. As long as there's not too much stuff in the way. I need a clean one though.
Rising wedge though was a dump.
Let me find a clean chart. Sorry, give me one more second. I'm gonna find a cleaner chart.
On your timelines. I know you have less time than I do actually. So it's not a big deal.
All right, this is a good one, I guess. So all right, here's a few things we can do. So using Fibonacci, there's two different types of tools with Fibonacci. There's the Fibonacci retracement, Fibonacci extension tool, retracement and extension, and this is what you would use them for. So when you're trading and you're trying to determine potential support and resistance zones, keep in mind, let's ignore for a fact what Fibonacci is. Fibonacci is a mathematical sequence of numbers where the Fibonacci sequence is 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, 3 plus 5 equals 8, 8 plus 5, so it just keeps going on, and it's infinite, right? So that Fibonacci sequence occurs naturally throughout the world. So every flower has a number of petals on it. That's a Fibonacci number. Every fish with scales has a number of scales. That's a Fibonacci number. Or the dimensions of their scales are a Fibonacci ratio. So there's Fibonacci ratios all over the natural world. It's just this weird, freaky thing. And it's
the golden ratio.
Yeah, so there's this weird, freaky thing where the Fibonacci numbers occur everywhere in the natural world. It's really nuts. So we don't have to get into that. We can get into scientific and philosophical discussions about it, but all that really matters is that it works, and it applies in financial markets too. So in the case of financial markets, we can use it for a few things. Number one, assume for a second that the markets follow Fibonacci. You could obviously use it if that's the case. Now, let's say the markets don't necessarily follow Fibonacci. You could use it purely as a self-fulfilling prophecy. I've explained this before. Just because people think that Fibonacci works in financial markets means that they're going to trade Fibonacci in financial markets. If you're trading at the Fibonacci levels, then the prices are going to reflect that. If everybody is buying when you get a bounce off of a Fibonacci level, that's going to cause the price to run up. So everybody's going to say, look, it bounced right off of the Fibonacci level. What actually happened was it coincidentally started to bounce at this one price, and then everybody started buying it because they thought it was bouncing off the Fibonacci level, which in turn caused it to bounce off of that Fibonacci level. So that's more or less what does happen. You can identify a self-fulfilling prophecy and use that to predict what's going to happen because you're predicting human behavior. We're using market psychology and saying that since everybody assumes that this is going to bounce here, it is going to bounce here because people are what actually make the market movement occur. People are what make it happen. So it's a self-fulfilling prophecy, and you could use it as a tool in that respect. So if you're looking for Fibonacci retracements, that'll help tell you where you might retrace to after moving up. So in this case, we had a short-term bull run where we went from here up to here. So if I use the Fibonacci tool to do a Fibonacci retracement, I would go from the bottom of this segment up to the top of this impulse wave. Then I draw it out a little bit to the side. Once I figure out the top, which is right up here, the top of this move, and then I'll draw it out to the right at that exact same level so that I can see where it applies to this other stuff here. If I finished right here and let go right there, then the numbers would be catching up or covering up this important area. So let's say this section over here hasn't actually happened yet. We just started. This hasn't actually happened yet, right? We watched it move up, and we just started coming back down. So it's like this. This is where we're at. We saw it move up, and then we were like, you know what? We thought this was going to be a 1, 2, 3, 4, 5 wave structure, and then come back down. So it looks like it's correcting now. Let's figure out where it's going to correct to, right? You with me? So we want to know what a potential target is where we might correct on the way down. That way we'll have a better idea of where we could buy for the next move up. So we want to be able to identify that bottom, place our buys right around that bottom, and then place our stop losses right below a strong support. That way we can move up, and if we're wrong and it comes back down, it'll stop us out before it goes to the next level. Because what you'll see is, in the case of Fibonacci or any support and resistance, if the price is coming down and we expect it to bounce off the 236, if it fails to bounce here and it breaks through, then you're going to go down to the 382. You're naturally going to fall to that next support. That's always what happens. When you break one support, there are no buy orders sitting there. People place their buy orders at the fib levels. Even computer programs and bots that are programmed to trade in these markets are placing orders automatically at those fib levels. So when you break one fib level, you don't have a support until you get to the next one down. And that's why it's so important to place our stop losses where we'll have, say we're coming down in price. Well, I'm going to show you with a real example here, actually. So this white out area wasn't filled in yet. We're trying to figure out what's going to happen based on the prior movement. So we had this impulse wave up. We had a 1, 2, 3, 4, 5, something like that. And now we're like, all right, now we know we're going to correct because we already started correcting here. We had a full 5 wave, a full 1, 2, 3, 4, 5, and now we're going to correct back down. It just so happens that we got I would have expected good resistance there. If you actually look, just as an aside, we're talking about how important support and resistance was before. Look at where we maxed out. Look at where this actually stopped. This is the beauty of it. You could have known this. On the way up here, I could have told you where wave 5 was going to end. Do you know how I would have known that? Is there anybody who wants to take a guess at how I would have been able to tell you exactly where wave 5 would have ended, most likely?
Because there's a shelf right at the Ichimoku cloud on the left, indicating that there's like a high level resistance. So, I mean, that's my guess.
Yeah, there's yes, but I wouldn't. That's not significant enough, just because there's a little bit of the Ichi cloud there. Okay. Think about what I said is the most important concept, right? That we have to master: support and resistance. So looking at this, if we were back over here and we're trying to figure out as this is moving up. If I were to tell you we're moving up, we're in wave 3, and I were to say, where do we think the top of this run could be? Let's find the next few big resistance points where it's gonna find resistance and possibly get rejected. Well, we would have gone and done this. All right, let's see. Right here, we got a strong bounce right here. And then later on, we broke through, and then we came back up and got rejected right here, right along this line. And you can move around your mouse to fill in visually to see these different levels across the screen. So seeing that, that's not great. There's only 2 points of contact, but they seem pretty strong. Let's put a note there so we remember that's a potential support or resistance point right there, right? So let's make a note right there.
Yeah.
That's a potential resistance. Now, let's see. Let's keep going. Oh, what do we have here? We bounced a couple times right over here. We had one tiny little wick that just made it through. Then we had like 3 hourly candles that bounced right off of this spot. Another wick over here that bounced off of that spot. And then 3 more hourly candles that bounced off of this spot. That's a strong resistance. The first one, 2 points of contact with a couple candles. It's a resistance. It's not super critical, but it's a resistance. But this one, boy, let's fill that guy in. Let's make a note of this really, really strong resistance right here. That's strong support resistance. That one broke through for a second, like I said, but only a tiny bit. And then we had 1, 2, 3, 4, 5, 6, 7 hourly candles, 8 hourly candles that got completely stopped in its tracks by this line. Now let's go to the right and see where did that end up. That wave 5 end. Bam. Bam.
Basically, right fucking in between. If you just raise your stop loss to anywhere near that area, you're locking in maximal profit. So,
bam. So if we're running up here, right? We're in wave 1, we're in wave 3, and we're trying to figure out what the target's going to be for wave 5 up here. We're going to get into Fibonacci extension and how we could have used it for a similar thing here, but I mean, that's amazing. Look how accurate that was. Something else that's important to take away here, right? Here's something else that's very important to note. I noted this really strong support resistance level, this resistance, and that ended up being exactly where we maxed out at the top of this move. Look at where this other moderately strong, this moderate resistance support that I found, support resistance that I found, right? And look where it is. It's pretty much right at that 236 Fibonacci level. So this is the 23.6% Fibonacci retracement from the top. So you understand what it's doing. When I draw from the bottom here to the top here, what's happening is it's saying, okay, if point A to point B that I drew is 100%, where are the Fibonacci ratios within that 100%? So 236 is a Fibonacci number, 832, 0.5, 618 is 786, so, and 1. So in the case of here, we have these Fibonacci ratios, and from point A to point B is saying that this is 100% of the move. So if you drop down to the 0.236, that's saying that that's a 23.6% retracement. So if we went from A to B, we lost back 23.6% when it gets to this line here. When it gets down to this line down here, we've lost back 50% of our entire move from point A to point B. So that's what these are. It's an actual percentage of the main move. One is 100%. If it retraces all the way back down to the bottom, we have retraced 100% of the move up. And that's exactly what we're getting when we're doing a fib retracement. We're seeing those different percentages. So in this case, you'll see we're on the way back down, and then when we're trying to map this out, again, assuming that none of this had ever happened and we didn't actually have any of this data, there's a few things that we could have looked at. So on the move up, just like we did on the way down, you could look for possible support and resistance. And you could say, all right, we were moving up, and then we got rejected right at the 618, came back down, bounced right off of the 786, back up, and then we got support from the EMA, resistance from the 55 EMA, bounced again off the 786. This 786 is a really strong support. Bounced back up, got resistance from the 618, then we finally broke through the 618, and then moved up from there. But we actually have right here and right here, there's a couple points of contact on the 618, so that's certainly a valid fib level. The 0.5 is going through all of this trading, and it doesn't really give us as much of a defined line. So over here, we actually have a definitive line from the 618, because we have right here at the top of wave 1, and then right here with this little bounce that came back up before it dipped back down again. So we have a couple instances here where we successfully tested 618 without a lot of trading going on around it. In the case of the 0.5, there's actually a ton. All of this trading is kind of all over the place around that 0.5. The 0.5 isn't really holding up as a strong support resistance in this case. It's not doing a great job. The 618 is, though, that was doing a good job as a fib level that was a support and resistance. So as we're coming down and we're trying to look for a potential bottom of this correction, say we have an ABC correction here, the ideal location for it for a couple reasons is going to be the 618. Number one, it's the best support on the way down where we're getting the most well-defined support and resistance. In this case, we got a lot of resistance on this bounce and this bounce. So the 618 is a really good SR level. So that's certainly a potential bottom for this ABC correction. Another reason I like it a lot is because it's right around wave 4. I personally love wave 4 corrections. When I see a strong bullish trading chart and I see a nice impulsive move, one of the things I look for is a potential wave 4 retracement where we see the Fibonacci level match up with wave 4 pretty closely, but more importantly, when I do an Elliott Wave count, I want that correction, that ABC correction, to come down and get really close to the prior wave 4, the end of wave 4 for the prior move up. I love that. That's just my favorite correction. It's always the cleanest. It always means that we're looking... Huh?
It's clean as fuck, because then you have an ABC right after that 1, 2, 3, 4, 5. Like, it's single spot.
Yeah, it's a textbook example. So I love when it gets down to the 4 anyway. So that's something I always look for, just to see if we have any reason to justify us getting there. And in this case, we had the perfect support. The 618 was really perfect. And then, of course, the ABC came and went exactly down to the 618. It bounced right off of the 618. In addition to having a really strong support there already, it was right near wave 4, which I really liked. So as we were retracing here, based on how impulsive this move is, I would have probably said what I would have expected if I didn't see the trading that I see here. I would have done something like this. I would have had something like that where we come down, and we bounce, or possibly the same thing but bouncing off the 236. So we would come down, break through that support, bounce around the 382, bounce up to the 236, and then go down to the 0.5. That's probably what I would have drawn, because it's a little less aggressive. And since this was a strong impulsive move up, I'd probably go with a little bit of a more shallow correction here. So I would have been a little wrong. I would have been wrong, straight up. Like, I would have been wrong. I'm telling you right now, as much as I see this, so this great line right here and the 618 would have been perfect. I can say that in hindsight. But if I was doing this live, I probably would have guessed that 0.5 would have been the target. But as soon as it broke 0.5 on the way down, I would have been like, okay, it's definitely 618. 100% it's going to the 618. At that point, I would have had a lot of confidence in that assessment. It's just, at first, I would have thought it was going to go to the 0.5 fib retracement. Once it does go to the 618 fib retracement, we got a really good bounce, and we're like, all right, perfect. That was the end of that correction, and now we can worry about planning the next move up. This would be wave 1, 2. We ended up with a failure. So we ended up getting a failure back in right after wave 1. So this count is now invalidated, and we're done with our Elliott Wave count right here. We're going to have to start something else. Sometimes you don't really have to even use Elliott Wave. I don't always use it. Sometimes in a situation like this where I'll see, all right, we had a failure, and now I have to justify the failure and draw out a combo wave. I'm just like, all right, forget it. I'm going to ignore that, and then I'm going to worry about it when I get to the current trading point over here or something. It doesn't have to be perfect, and you don't have to have an explanation with Elliott Wave for everything. I don't. There's a lot of aspects of Elliott Wave I don't fully understand that I don't know about. So I have no problem walking away and saying I can't get a good count on it. In this case, this was a perfect count. I wish this kept moving up after, because this also would have been a perfect example of Elliott Wave, how fractal waves, where this is all just a subwave of another wave. So this all is wave 1, this is wave 2, that's wave 3, and then so that would have been a good example if we kept going up. But we had a BTC drop here, and then everything took a tumble, including GTO, and it never really recovered. So that would have been a good example, but this is a perfect example for demonstrating the Fibonacci aspect of this. I'm not as worried about Elliott Wave here. I'm more concerned with Fibonacci. So this is where Fibonacci came into play. Now let me give you an example of a Fibonacci extension here and how that could be utilized. So with Fibonacci extension, go to trend-based Fibonacci extension. Let's do oh, that actually doesn't work. Actually, you know what? That does work. Okay. So this is a perfect example. So I'm going to go with the Fibonacci extension tool. The beginning of wave 1 to the top of wave 1. What I just did there, it's the same as when I drew a fib retracement tool from the bottom to the top of that last move up, from here up to here, in order to predict the retracement levels back down. This is 24% back down from the top. This is 38% back down from the top, 50% off from the top. And I just drew wave 1 from the bottom to the top, and now I have this Fibonacci chart just like I had over here when I drew this, except I can move it anywhere on the screen. And what we use this for is I do a fib retracement. I do a fib extension, rather, of wave 1, and that kind of captures wave 1's fib levels. Now I can drag it to start or stop anywhere I want. So I'm going to place this all the way down here, because I want it to start at the beginning of wave 3, which is right here. So if I have that at the beginning of wave 3, what that's doing is it's pretty much like I'm doing this. It's pretty much like I'm taking a line and drawing that line from the bottom to the top of wave 1, and then taking that line and putting it up here at the beginning of wave 3 to try to see if wave 3 is bigger or the same size as wave 1, right? See that?
Yeah.
So, where's the good...
And then wave 3 is usually like 1.618, like compared to wave 1, which is like 1.
Well, I'll get to that. So,
Okay.
So there's a couple things. In this case, this isn't a great example. In fact, I would have to adjust this count now that I'm looking at it. The wave 5 count would still be right, but just to illustrate it, this isn't actually correct, but it's not important right now. Just to show you what I'm doing. So this is wave 1. I have wave 1's Fibonacci extension, which I trace it down to the bottom of wave 3. So now this is saying that if I drew that line and put it at the beginning of wave 3, this 1-to-1 extension, that would be wave 1. So if I were to essentially go and say, like, all right, I'm drawing from the bottom of wave 1 to the top of wave 1, I'm going to move that up and place that at the beginning of wave 3, then that's wave 1 transposed over here, right? And the top of it is exactly at this 1, because that's a 1-to-1 extension. Just like when we're going from the bottom to the top of this run and then retracing back, 100% retracement is 1. That's saying that this entire move is one big line, and this is how many stops along that line are we going before we're back the entire length of that line. So wave 1, right here, a 1-to-1 extension is the exact same size as wave 1. So in this case, wave 3 is the same size as wave 1, which is, it's possible. As long as wave 3 isn't the shortest, it works. I'm more concerned here with just illustrating the concept, which is great because not only do you see a perfect 1-to-1 right here, this is a perfect 1-to-1 extension for wave 3, but look at what happens if I do the same thing for wave 5. Usually it's the other way around. What happens most often is wave 3 is going to be a 1.618 extension of wave 1. 618 is the golden ratio, and it's the Fibonacci golden ratio. So 1.618 is the most frequent. Generally speaking, there's a lot of other scenarios and ways to calculate things, but shooting for a 1.618 extension for wave 3 and then a 1-to-1 extension for wave 5 is very standard, and while it doesn't always happen, it's a great starting place because you can start from there and then adjust it and move it around a little bit from there to make sure you have the best possible setup. So if we do the same thing and we draw from the beginning of this wave 1 to the top of this wave 1, and then instead of pulling this Fibonacci extension tool to the beginning of wave 3, let's pull it to the beginning of wave 4. And now look what happens. If we start it right here at the beginning of, I'm going to pull it all the way out here so it's easier to read it. If we go to the beginning of wave 4, this is the one, this is really hard to see on the screen. Let me move this red line out of the way. So this right here is the 1.618 level, 1.618. So that means this is 161.8% of wave 1. So I drew this orange line to show wave 1. And then I moved it up, right? So that orange line I traced over wave 1, and then I moved it up to here. If I did the same thing and I moved it up to the beginning of wave 4, that means this is going to take one of these plus an extra 61.8%. So this is 161.8% of wave 1. That's a little reversed, and that would usually be wave 3, but this is still a perfect example because it's showing you how well Fibonacci matches everything, how well it fits. The trading activity, the price action on this thing is flawlessly matching up with Fibonacci, and the Fibonacci ratio and the Fibonacci numbers are working very, very well on this particular chart. So it still works really well, and this is a good example. I want to show you another example on a cleaner chart of where I would use fib extensions. So doing an extension, you could also do it on the negative side, which we could do in a more detailed video later when I have more time. But let's see here. Come on, it's frozen.
That's basically like I wanted to see how to target good entries because you just told me how to target like good exits, even though like I would just raise stop loss. But I wanted to learn how to target like really good entries using the fib retracement tool, but I don't know if you're working off rallies or if you're working off like how deep the dip is or like how that works really.
Come on, why is this so freaking? Hold on. This is somebody just posted this in the chat. Yeah. See what it is. Oh yeah, this is from the textbook that's in educational resources, right? I have a bunch of this stuff, which we can go over later, I suppose. I have a lot of this stuff in the educational resources channel. But yeah, we can go over this and I can explain how a lot of this works. But there's different levels like that are at a higher or lower probability that you have a better chance of getting. So this would be wave 3. Most commonly, it's the 1618 extension of wave 1. This rounds 618 up to 62, but this is the 1.618 times the length of wave 1 is equal to wave 3. It also works with other levels. You can do, if it's an extended wave, it could be 2.618. So there's lots of different ways to do it, but that's the general rule is what I was just showing you. This is where wave 1 is X. Wave 3 is going to be X times 161.8. So this is all the stuff I just showed you, but this will I can use this to illustrate it better and to give you. You already have this as a cheat sheet, but here's like it shows various analyses of knowing what the highest probability is for retracement levels. 40% of the time, where you're going to get a 1.75 retracement, things like that. Wave 4, 24%. Most likely of wave 3. So I use these numbers, but I guess that would be a good way to show you guys. Some of them I do. I never really use extended. It's very rare to get that extended of a wave 3 where it's like up to 4x or 3.618, but we can get to that later. So just to finish out this example, because I have to get going, pick up the wife. Let's see. You know what? Let me check her flight number so I can check her flight.
Man, bro, you don't want to catch that shit. So,
1:14 arrival, so I have to leave in 4 minutes. I'm gonna have to go get dressed. All right, yeah, we're gonna have to resume this later. Boki, yeah, Boki isn't gonna be around for the later one, so I hope that fib description was good. Since you're here right now and you can't be in the one later, I can add whatever I didn't go over now. I can go and add that to the stream tonight in 7-8 hours. I could also start a little earlier if you're available. Is there any questions that you have right now? Or is there anything that you want me to cover in the next video, which you can then watch later, even though you can't watch it live? You can watch the replay later. Is there anything?
Basically that what I was saying about the like finding an entry.
Hold on, no, I'm talking to Boki.
Oh, okay. He's like smoking a bowl and shit.
Read up, Cowboy. The one tonight, I could do it anytime really, but I was gonna say start anywhere from 5 to 9 p.m. I can start, and I can go all night. It doesn't really matter.
Shoot for earlier, bro. If you're asking me, shoot for earlier. Just not because of like personal preference, but because of like bump activity and shit. We're gonna want to be around for them, but
yeah, it's not gonna work because we have
start early as you can, basically.
we have people in Europe aren't really going to be in that one, and everybody said 9 p.m. sounds good. 9 p.m. is perfect. Everybody's saying 9 p.m. is good.
Alright. I mean, either way, I can still stay up, but I'm just saying there's going to be more activity, I think, in the next, 2.5 hours from now. So the closer that you can get to getting on earlier, I think the better, but it's not necessarily we're going to die or anything. We're going to miss out on.
It's 8 to 9 p.m.
Okay.
It'll be 8 to 9 p.m. So, yeah, Pokey, I need to know, you're not in the voice chat, but I'm assuming you're listening to me through YouTube. Any questions right now, and anything that you would like me to talk about tonight, since you're not going to be able to attend the live stream? Okay, so Fibonacci extension is important. Definitely want to use that. I'm going to go over it more in tonight's stream. I'll go over it in more detail. What I'm actually going to do, and this time I kind of had to look around for good examples. Luckily, I found GTO was like a perfect example since everything fits so well. I mean, this was just a flawless example where I went and I showed you, well, the top of this was easily predicted because we had strong supports here. Same thing, got a decent support there, and then the 618 was the perfect bounce. So this just happened to be perfect ratios. Everything just was flawless. But that's the thing. A lot of these coins and a lot of these charts do that. They perfectly adhere to these rules because the rules work very, very well. They're very well at predicting what's going to happen and analyzing what has happened. So utilizing these concepts make you a much, much better trader. And anything you don't understand, talk to me about it, and I will teach it to you because I love explaining this stuff. So, all right, I'm going to disconnect now so I can go pick up the wife from the airport. I'll be back in a couple hours, and then tonight we'll do the other live stream. I'll be back, and I'll be active in the group the rest of the afternoon, but we'll do the live stream tonight. That's the plan. And if you guys think of anything else you want me to put in the live stream for tonight, then tell me. Boki, if you think of anything else you want me to go over, tell me what it is, and I'll review it in tonight's live stream so you can watch it tomorrow or the next day on a replay.
Alright, bro. Well, good luck with picking up your wife. Make sure she stays safe and shit.
Yep. All right. I will talk to you guys in a bit.